National Bureau of Statistics says Nigeria's annual inflation rate hits 22.79% in June, surging 22.41% in the previous month. This is contained in the CPI and inflation reports June 2023. The Statistics Office said the June inflation rate showed an increase of 0.38 percentage points when compared to May 2023's headline inflation rate. On a year-on-year basis, the headline inflation rate was 4.19 percentage points higher compared to the rate recorded in June 2022, which was 18.6%. Also this morning, the Nigerian National Petroleum Company Limited directed its outlet nationwide to sell fuel between 480 and 570 naira per litre. Today, we'll be analyzing all of these issues and, of course, the implications on the economy. With me to do this is the Director of Research and Strategy with Chapel Hill Denham, a friend of the house, Mr. Tajuddin Ibrahim. Good afternoon, Mr. Ibrahim. It's good to see you.
Good afternoon. Thank you very much for having me on the show today.
Yes, that smile, I want to follow up with that smile. You know, yes, the focus was to be inflation, but you've seen what has happened today, and at the moment, we are paying more than 500 naira now for a liter of PMS. My question might come in two ways. First, what's your reaction to this? And some will say, we are in a deregulated market. Why is NNP still coming up with prices? That is what worries me. I've got a lot of questions to answer today. But in your terms, how does this really come to you?
So it is coming as a major negative development, to me, and I believe it is also negative for Nigerians, no matter what income level you belong to, because the cost of moving around based on PMS prices has risen. That is what it implies. And, one is not necessarily seeing an increase in income level, simultaneously. So that is why it is negative. The second is around, the deregulation of the market. No matter how much the market is deregulated, I think, the government still has a role to play in terms of ensuring, that the prices are not, too much in terms of the gauge of demand and, supply. And that is why I think the NNPC is still ensuring that, they monitor prices. Yeah, and I think this is happening because we are still in the early days in terms of, deregulation. Over time, my expectation will be that, that will come to an end, and those that import and also those that produce and refine locally can, decide what prices, works for them. By then, it will be driven by competition. I think so.
I'm really waiting for that time where competition will drive this market, because that's one of the ultimate aims, of course, of the PIA and all that we see in that space. But before we move on, I'm thinking with the Forex issues too, which is a challenge, and we'll, of course, touch on, how attractive will it be for marketers to even want to bring in this product? That's another worry.
Okay, so it is a worry because we do not have the required liquidity in the foreign currency market.
Yes.
And, what I would expect to happen is that in the short term, we are going to feel the negative impact because importers that will bring in PMS, would do that at prevailing, market rate. And what that implies is whatever the market rate is, Nigerians, will just have to buy PMS at, those prices. Another thing that we should, think about also is that we are also still in the early days when we are talking about the foreign currency market development. There will be a time that, liquidity will improve in the market, and when that materializes, we will likely see exchange rates go downwards from the current level of around 800, naira to the dollar. This is not something that, we are seeing for the first time We have seen it in the past when in 2007, before the Iron Hill window was set up, we had the US dollar move to as high as 520 naira to the dollar. But when liquidity improved in the market and then transparency also increased, then we began to have the exchange rate moving downwards to settle at around 360 naira to a dollar back in those years. And it was a bit stable for a couple of months or even close to 1 year before we began to see pressure. So it is more of a function of liquidity. And if that increases or improves, then we will see the naira come down. And at that point in time, there will be there will be calls by the petroleum importers to also cut their petrol prices. Nigerians should bear one thing in mind. Our petroleum prices can go up and it can also go down, unlike the previous era when it was static.
Let me move very quickly and ask you, how will all of this affect inflation? Or has already been affecting inflation?
So all of these, are going to have, negative impact on inflation, particularly, food inflation. And I say food inflation because that is the element that, drives inflation rate faster in Nigeria compared to core inflation. And the element of it that will be driving, inflation is transportation costs. The transportation cost impact on Nigeria inflation is multidimensional because we consider from the farm to fork. That those two ends. There are a lot of transportation costs that business owners will have to bear, and those costs will be much higher. And we would expect that to have higher impact or worse impact on Nigerians in terms of inflation. So we are going to see it impact inflation. The June inflation that we saw is not fully reflective of PMS price increase. It is also not reflective at all of foreign currency devaluation, I think.
Now you've talked about food. It's a 22.25% from 24.82%, which we had the previous month. And this is other moves by governments. You see recently that government, FG, put a state of emergency with regards to food security and, ruled out some policy measures that will be instituted in the immediate to address all of this and all of these challenges. Now, do you see this in one way or the other helping bridge this gap? I'm talking about food price again.
So those can bridge the gaps, but what is not clear as I speak to me is how do they want to implement it? Because we always talk about policy. It is good to talk about policy. It is good to put in place policy. What really matters and material is the implementation of such policies. When we have such a good policy and plan in place, the question is how do they want to implement it? And implement it in such a way that we all can see and feel the impact. Those are the areas I believe the government should look at and work on and ensure that Nigerians can feel and see and talk about the positive impact that will have. Happy for them to have such a policy, but I lack clarity around implementation as I speak.
And that is really important. Implementation remains key. We also grapple with some structural issues around infrastructural issues, which all of this contribute to our rising inflation figures. Now, at the time, we were projecting that there's going to be a deceleration. But with this removal of subsidy, of course, increase in price of PMS, that seems not to be happening anytime soon.
Absolutely not going to happen anytime soon because if we move from the current level, we are at around 22.79%. We at Chapel Hill Denham were forecasting that June inflation will print at around 23.16%. And coming at 22.79% was a positive surprise to us. But later we recognized that it is not fully, it has not been fully captured. The PMS increases have not fully been captured in the CPI calculation for the month of June. So what we expect is inflation will still be around 25%. This year, it can go as high as that based on our forecast for the full year 2023. And we believe that food will play a pivotal role in that forecast. And that is partly why I believe that the government should work around ensuring that we have much lower food prices, or we have slower pace of increases in food prices. It is very important. Otherwise, Nigeria should just look to end 2023 with inflation rates that looks like 25%. I think so.
And of course, that will definitely affect everyone in its entirety, because there's no amount you have. Once inflation eats into it, it's not worth what it should be. Now, we know that the Monetary Policy Committee has been defending, how will I put it, trying to rein in on inflation with increase in rates, which many say might not be the way to go, considering our peculiar problem as a country. Do you think that the CBN will continue with this move? Like people will say, if you're doing something, you might need to change it at a point. Go ahead, sorry. Go ahead, please.
I think what most likely will happen, and I'm not sure how much attention Nigerians are paying to what the CBN did recently by cutting the cash reserve ratio for merchant banks to 10% from 32.5%. What that implies to my mind is that it reflects accommodative monetary policy stance, because you increase the CRR when you want to tighten. By then, you will be restricting liquidity flows in the financial system. But what they did announce recently is that they have cut it down to 10% from 32.5% effective 1st of August. What does that mean? That means that they are looking towards much lower interest rate environment, an environment where liquidity drives interest rates lower. They did not go to the Monetary Policy Committee to make this adjustment. They made it at the capacity of the Central Bank of Nigeria. So which means that Nigerians should expect an increase in liquidity flows to the financial system, and that at some point could help to bring down interest rates and encourage borrowing and lending in the economy as a whole. But inflation, which is the monster in the room, will still be stubbornly high, and I'm not sure the government is really looking in that direction. The monetary policy rate hikes that we have implemented in the past few months has not really made inflation to come down. So it is looking to me like a lost battle for the CBN, in my view.
Financial institutions, where they stand in all of this, considering all of this developments and directives coming on and off, even with regards Forex and all of that. What do you think is the position of the financial institutions? Some will say one way or the other, they will still make that large profit that they used to make. Do you think that will continue the way it used to be?
So the time that financial institutions can make money is when they can grow the volume of the businesses that they do. They are, largely speaking, into the business of lending. They are also into the business of investing in securities, but the former is more of their business, talking about the banking sector in this case. So they need to lend more. And for you to lend more, your rates have to come down. If your interest rates are not low enough to attract borrowers, you are unlikely to grow. And that is one thing that I think Nigerians should expect. Interest rates as we speak are at the roof. or let me say even above the roof. They are way too high and not encouraging for people to borrow. When we have liquidity inflow into the financial system, and that sort of reduces interest rates in terms of lending by financial institution, because they now have more liquidity to lend, then we can begin to talk about it being positive for the financial institutions. But when we consider naira devaluation, whichever way you look at it, it is positive for the financial institutions, particularly banks that have excess dollar assets compared to dollar liabilities. That is what we call net open position. So in that case, it is positive for them because they will make more profit. But on the interest rate leg, it is not positive. Interest rates are high. They are not going to see an increase or substantial increase in the volume of loans that they disburse to customers. I think it is only positive for them on the foreign currency leg. That's my view.
Very interesting conversation and a lot to be expected as we move on. I must thank you so much. Interesting conversation as usual, Mr. Tajuddin Ibrahim, the Director of Research Strategy, Chapel Hill, Denham. Thank you so much and do have a great day at work.
You too.